This week, how a reverse mortgage could save uninsured homeowners from a total loss.
Building relationships is the way Mutual of Omaha has grown into one of the leading financial services companies in the world. Our reverse mortgage wholesale division is proud to carry on this 100-plus year tradition. To your borrowers, a reverse mortgage is more than a transaction. It's a promise of a better, more stress-free life. Our goal is to provide you, our valued client, with the best service and support possible so you can focus on helping your borrowers achieve the retirement of their dreams.
Welcome back to the Industry Leader Update. A casino is a suitable place to roll the dice and take your chances, win or lose. However, gambling with the security of your largest asset and risking the roof over your head is not. The Insurance Information Institute reports that 5% more homeowners have not purchased homeowners insurance than just 2 short years ago. And that's not surprising considering skyrocketing premiums in several states, most notably California and Florida. Are most of these homeowners well off with substantial assets to self-insure and forego insurance? Not necessarily. The Institute survey showed that half of those who chose to forego insurance on their home have an annual income at or below $40,000. While wealthy individuals may have the ability to self-insure, most Americans are pooling their risk with an insurance company who does have the financial capacity to absorb the expense of repairing or rebuilding or replacing a home. As we know, if you have a mortgage on your home, you are required to carry homeowners insurance policy. You can't let it lapse. Now, the lender has to protect the collateral that is securing that loan. In a recent column in themessenger.com, David Stevens, a name that you're familiar with, the former head of the Federal Housing Administration and also the Mortgage Bankers Association, said that the Insurance Information Institute survey suggests that many of these homeowners may be retirees with a paid-off home who are living on a fixed income. Inflation is likely influencing that decision for homeowners to forego their homeowners insurance. Stevens said, for some people who are living on a fixed income, who have seen the price of necessities like food and energy go up significantly in the last 2 years, it's one they may have to make, however reluctantly. Insurify, an online insurance marketplace, projects the average cost of homeowners insurance will be $1,784 this year, 17% more than in 2021. Residents in some states are getting charged more than 3 times that, it said. And homeowners living on a fixed income who cannot afford homeowners insurance are also at risk of falling behind on their property taxes due to constricted cash flow. Stevens noted, as long as you don't have a mortgage on your home, you don't get kicked out if you don't pay for homeowners insurance, but you will get kicked out if you don't pay your property taxes. How could a reverse mortgage literally help save the home that these at-risk individuals are living in? Let's do the math. Let's say a couple has a home worth $300,000 that's been fully paid off, but they cannot afford homeowners insurance. Should they lose their home to a natural disaster or fire, they could easily find themselves being homeless, not having enough funds to rebuild. However, by utilizing a reverse mortgage, that couple could take out an annual withdrawal from a home equity line of credit or available principal limit to help pay that annual homeowner's insurance premium. Now, that specific strategy would give them both peace of mind and, most importantly, it would protect them from becoming potentially unhoused and losing their largest asset. Now, of course, the reverse mortgage's initial closing costs, the upfront FHA insurance premiums, and accrued interest would add to the loan's balance over time, but they've succeeded in protecting what is likely the largest asset they'll ever own and may help ensure the home remains for their heirs to inherit. At lower income levels, homeowners insurance may be perceived as a discretionary purchase, the Insurance Information Institute said in a report on its survey. Weather does not discriminate by income, and low-income homeowners remain at risk. Logic would suggest that only a small portion of low-income homeowners could withstand a total loss of their home from an unforeseen weather event without insurance coverage, said Robert Dietz, chief economist at the National Association of Home Builders. Now, for those of you watching who originate reverse mortgages in Florida and California or any state where homeowners insurance premiums have skyrocketed, you may want to consider to specifically marketing to this at-risk group. After all, a reverse mortgage could literally save the roof over their heads. Now, what are your thoughts? Leave your comments in the comments section below, and please share this video on LinkedIn and other social media platforms. We thank you in advance. We have a YouTube channel where you can subscribe, and if you hit the notification bell, you'll always be alerted when we have a new episode. Each and every week, you can catch up on your reverse mortgage news simply by listening in your car or at the gym, doesn't matter where, with HECM World Weekly. We're now on Spotify, where you can also listen, and Apple users, you can catch us there at iTunes. And don't forget, we're on podbean.com as well. Thanks again for joining us, and be sure to return next week for more reverse mortgage news, commentary, and analysis here at HECMWorld.com. Have a great week.